Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, April the 11th of the year 2018. Let's talk trading, chart periods. Okay, I know if you've been following me for any time, you've heard me say that price is the same on all chart periods or time frames. Um, there was a trader who was asking me about some frequency distributions, wanted to use ATR, wanted to know what happens on H1 if price has gone up 40% of the ATR. Well, unless I'm misunderstanding what they're asking, it doesn't matter. If price has gone up 40% of the ATR, it's gone up 40% on all chart periods. It doesn't matter if it's the 1 minute, if it's the tick, or if it's the monthly chart. If it's gone up 40% of its ATR past, the open. But the thing is, I don't really think that's what they want. I think they want more of the buy zone stats. If price has gone up, X number of pips, how many times in the past 100 days or 200 days has it, gone up Y pips? So like in the buy zone, if it goes up 10 pips, what's the likelihood it'll go up 20 or more? So but as far as chart periods, it doesn't matter. It's because once you draw those horizontal lines, they stay fixed. They're not like moving averages or stochastics or any of those other squigglies where if you change the chart period, the values, the results, the outputs change. So don't be confused about chart periods. People go, I'm trading the H1 chart. No, you're trading price. Oh, I'm trading a weekly chart because I'm a swing trader. No, you're trading price. It's all you're trading. You're trading one price for another. Doesn't matter how how you slice the time periods. You are trading price. You're not trading charts. But what you are or should or better be doing is managing your money and your risk. Placing your stop losses accordingly and setting your position sizes accordingly so you don't blow your account. So let's look at what's going on here. We can see that the dollar yen failed to break out here. In fact, it's heading the other way right now. It's heading south. It almost hit the midpoint, so you can see it was in the wick zone and it left the weekly wick zone, so there was some profit to be made there. Probably say 28 pips or so. And these numbers here, that's the distance between the line and the close. And the way it works is it's close minus the line. So that's why you see it's 8 pips below the open, 63 pips below the previous week's high. And once again, all the gaps have filled for the week. And looking at the daily, you can see here so far it looks like we had an inside bar, and you see it went in this week, the daily wick zone and out and into the lower and the upper. So we'll see that in a chart or two. But see, we're on the D1 time frame. Price is 106.84. And we're on the weekly 106.84. Price is the same. Oh, it's just, I just find it amusing. Oh, yeah, that reminds me. We need to change this back here. I find it amusing that how that myth is so popular about, trading these different charts. Like one chart is going to tell you something that another chart isn't. Because it's all levels, kind of like that Seinfeld episode with Kramer talking about having levels in his apartment. Because I mean, here's the daily low. It's the same thing. If I switch time frames, these numbers don't change. Okay, it's the same. They're levels. Now you get those levels based on the different charts, but you're not trading those charts. Maybe that's a subtle difference. I don't know. And here we go once again, looking at the buy zone. Oh, and I added something just for the fun of it. I know I talk about adding all this stuff, but you have to remember if other traders are using it, you don't have to use it, but you can use the knowledge that they're using it to enhance your trading. So I added the VWAP, which is part of HL5. And I had an idea. The only reason I put the VWAP on is one of the traders in the Pal Talk chat room, the 2% Club, was showing me something with his market profiles. And it reminded me maybe I should add market profile in here too. I've got that code. I'll have to see if I can embed it in this indicator. It'll be kind of interesting though to figure that one out. But you can see here, show VWAP true. And usually VWAP is a squiggly, but I just show it as a horizontal line with the current. It's recalculating, of course, every tick, but I just show it as a horizontal line because I don't like squigglies. I guess you could say it might be deceiving, but all I care about is the current. Why? Because price usually wants to head back toward the VWAP after it goes so far away. So you can see here price was, how many pips away from the VWAP? Let's see, click that little button on the mouse, put it there, and we draw here like this, and it was about 32, 33 pips away. And then you can see now price came back across the W1 open, the weekly open here, and now it's reversed back, heading back down. So after a certain distance, it likes to head back towards the VWAP. And you can see here, open, if you faded towards the pivot point, you got paid, and we'll talk about that. Yeah, if you notice, I did add the dashboard here just to put this, have the close minus open column since this is the buy zone. So like you can see possible trading candidates here. So you can see we have the Australian US dollar. And once again, there's the pivot point. You can see it hit the pivot a couple of times. So once again, if you say, I'm only going to trade towards the pivot, you see you wouldn't have entered those trades. You would have waited and traded these, taking it towards the pivot, fading the pivot. Highly profitable trade. In this case, it would have been worth about 14, 15 pips. And we can move on to the rat zone. And you can see here we had a put in the high, put in the low, price popped out and is back in. So there may be another potential trade to trade the rat zone. 56 pip range, not really that big of a range. Okay, we have the open, we have the pivot. See price move from open to pivot. That's the lesson that is taught every day. Now, does it work every day? No, there's usually a few open pivots here and there, but a lot of times they'll get filled sometime in the future. So you can see right here, there's this pivot that did not get hit. So 10653, you might see that by the end of the week. It's possible. Oh, I was doing some things yesterday. Let's put this back to H1. So, well, let's go back to H5. Why would I trade H5 if I just told you price is the same on all chart periods? You're not trading chart, you're trading price. Well, you see here, you had a price turn. And what do you have? You're pretty much having higher lows, higher highs on the M5. So what this does is you can time your trade, you can fine tune your entry using the same bar patterns that you use on H1. You see that? So right there, you can see it was red, but it's just like, what's going on? But you see that 3 ball. Okay, so it's like, okay, price came down, put in a 3, put in a, pushed it further. Now it's coming back. It crossed this line. What's going on here? Oh, low, lower low, higher low, right here. Red, green, price turn, take that break, either one, right there. And you can see price put in a higher low here, comes in. Maybe you take that break, maybe you jump in at the open. And that's how you use the price action. So you're not trading the chart, you're trading the price movement. All the chart's telling you is, okay, on this particular time frame, you're getting higher lows. Now somebody want to say, well, isn't that trading the chart? Well, no, you're trading price because price is making higher lows. Because if you looked at the ticks, which is the only true chart, you could see prices going this direction. This just helps you see. I mean, you could watch H1. I mean, if you were watching it, you'd see that it was going like this. And you could say, okay, well, if it gets above this area, I will go long. It's doing that retrace. That's just the same, but it's just using the M5. Why is it taking so long? You can see it. Because remember, you want to trade what you see. Oh, yeah, the idiot mode. Okay, and we have yesterday's 5 lines. And once again, price at the line, H1 candle color can be profitable. Here you had to either get out with just a couple, scratch the trade. Here you can see you had a nice profit. Don't want to give it back. And once again, if you just woke up a few hours ago, you had a chance to pick up a few pips here. Now, of course, if you reduce, let's see, maybe we'll get all the way down to the 5-minute. You can see, hey, green 5-minute at the line. Are you trading the chart or are you trading price? You're trading price at the line. That's what you're doing. Doesn't matter. You see it's on the M5, it was green here, but it's still price at the line. H1, it's red at the line, but price is moving this way. So you take the trade when price is going across it. Now, you'd be trading against the H1 candle color, which just means you have to be ready to exit and exit quick. That's all. But if you look at the previous price action back here, you can see what happened. Boom. And so that means there must have been some buyers waiting here. And so it shot up fast. Remember, if it shoots up fast, there's more buyers. So they bring price back down to pick up the rest of them. Price doesn't like staying in a wick zone. Price on the holo, out, back in, holo opportunity coming up. And you can see here, price is going down. So that's it, fellow traders. Just remember, it's not what you trade. It's not what chart you trade. It's how you trade it. Let's go drain the banks.